Good afternoon, everybody. I think the economy and sustainable finance used to be buzzwords, but now is extremely important. At PNC, we're committed to being 100% renewable by 2025. And in the last 5 years, we've invested $36 billion in sustainable energy projects. But I think for those of you that are frequent flyers at the Mackinac Policy Conference, you might think our best investment so far is the hiring of Harold Ford Jr. Harold is going to run our Special Purpose Acquisition Corp, which we've already started. But the key to this is not that we're forming a SPAC. The key to this is the fact that all the proceeds from that SPAC go into our foundation, and when they come out, they support and stand up the Black and brown communities and economic equity. So I just wanted to point that out. I think all of you would agree, pretty good investment, PNC. Thank you very much, and please enjoy this panel. Thank you.
Please welcome Vice Chairman and Chief Executive Officer of Rocket Companies, Jay Farner. Executive Vice President and Vice Chairman of Corporate and Institutional Banking for PNC, Harold Ford Jr. Vice Chairman and Chief Commercial Officer of the New York Stock Exchange, John Tuttle. And to moderate the discussion, President and Chief Executive Officer of Siebert Williams Shank and Company, LLC, Suzanne Shank.
Great, the crowd is coming in. So we have three wonderful panelists here today who are going to guide us through a discussion about the economy, growth, and sustainability. I want to start with the pandemic. We can't have a discussion about the economy without talking about the pandemic, the Delta variant. How have you all been guiding your mammoth companies through the pandemic over the last 18 months? What are your back to office plans, and are you mandating vaccines for your employees?
I'll jump in. It's been an interesting 18 months. As you know, Suzanne, for us, one of the critical things, we're in a business where it's every day we're talking to millions of clients, and thousands of mortgages are being done, and so we can't afford to have one day where we're not operational. So we were able to send 98% of our team members home within about 48 hours of making the decision that was the right move. And these last 18 months have been interesting because it proved that our platform worked with everyone at home. But I think we've also learned that being together also matters. And so now it's really about, I think, all of our companies determining what the right mix is between giving that flexibility, working from home, but also making sure that we've got people in the office collaborating and working together. And that's where our focus is right now.
Great. We're looking forward to everyone coming back downtown for sure. Harold, what about PNC?
Well, first of all, it's good to be back in Mackinac. I have been fortunate to be here for many years because of my long relationship with Dennis Archer Jr., who I love like a brother. And in fact, I had no choice but to be here because he called and told me that I had to be here. And to be on this great panel and to be with you, Suzanne, my colleague, Rick DeVore, who is really a boss and a colleague because of the way our bank is organized. I've been at the bank now a little less than a year, come October 1. And there's such autonomy given to the regional presidents across the entire banking franchise. There really are the many CEOs of the bank. And I think if you were to talk to the big boss in our company, Bill Dimchak, he would say that the ingenuity and the creativity of the entire workforce of the bank has really been unbelievable. In fact, a lot of the things we're talking about on this panel today, some of the greatest ideas I think the company's had around all of these issues has come at a time in which there's not been the office time, and there's been really, we've all been forced to, as Jay points out, all these companies, including the stock exchange and everywhere else, you've been forced to figure out ways to unleash and to spark that kind of creativity and growth. Naturally, there have been conversations around vaccines, and whether or not it should be mandated or not. We're hearing government think about boosters, and I hope that people just get the vaccine, because I think that's how we get back to some of the normalcy that we really want. But we'll have a chance to talk about all the things that have come out of this thinking. But in some ways, I think a lot of companies have seen themselves grow in ways they never thought they could, and frankly may not have had it not been for the pandemic. So I think we're going to think about a lot of these things and ideas, and for that matter, new trends will emerge from there.
Great.
Well, it certainly has been an interesting 18 months, and I'm a little biased, but I see there's 5 buildings that define America: the White House, the Capitol, the Supreme Court, the Grand Hotel, and the New York Stock Exchange. and we were largely a 99% work from office type company. And so overnight, just like Jay and Harold with their teams, we switched to being 99% remote. And for a lot of people to separate the New York Stock Exchange, 11 Wall Street, saying you're fully remote, it was hard for them to understand. But what we did over the next 18 months was, number one, find a way as safe as possible to bring in our regulatory and operational staff to make sure, just like Jay's firm and Harold's firm and your firm, we didn't have, or we minimize any disruption, or minimize any disruption to service to our clients. But then we also realized we had a really interesting platform ourselves. So we have 2,400 companies on the New York Stock Exchange, and we could talk to those leaders of those companies and understand how they're navigating the pandemic, managing their workforces and their businesses, and take those best practices and share them with our listed company community. So we've welcomed both clients back to the building, but also our employees back to the building. When it comes to vaccines, that's something we've been monitoring very closely. And just about 2 weeks ago, we mandated them for those that would be visiting or working on our trading floor, just given the importance of that location. But we're going to continue to monitor the events. I think what these gentlemen said as well is, over 18 months, culture is so important to your organization. And so finding ways in this new world to be able to maintain that culture that drives innovation and drives performance and service to your clients has been challenging at times, but we found some opportunities in that as well.
Great, thank you. We're operating in a time called the Great Resignation. Have you all experienced this flow of people leaving your businesses, the opportunity to hire great talent? I know with lots of people leaving New York, we felt like we might have an opportunity here in Detroit to attract some of that talent here. How is the labor shortage impacting your businesses?
Sure. So it is impacting our business. It's impacting a lot of our clients' businesses as well. As if I think about the New York Stock Exchange, about 45% of our employee base are developers. And these are folks that are highly sought after. We want the absolute best developers we can find, because if you think about, if you have the best developers, the fewer problems you have down the line, fewer customer service issues, anything like that, peak performance for you. But also where job growth is incredible right now, and mobility is unlike any time in history, a lot of our employees are getting their doors knocked down with significant salary increases. You can work anywhere in the world. And so for us, we realized that we can't have a one-size-fits-all approach to managing our workforce. We're going to actually bring it down to the manager level and say, what is the best mix of in the office, out of the office, for you to be successful, to not only attract and retain the top talent, but deliver the performance that our clients expect? Great.
Anyone else?
No, I think John nailed it. I think you really look at it across industries, and you see that. I think one of the, and again, I think so many things have come out of this that we didn't expect to come out of it. And one of the things that has come out of it, to John's point, and I'm interested in hearing Jay talk about this, is it's just had upward pressure on incomes. And so, PNC, we announced very recently an $18 minimum wage mandate for across the. There was no objection to that. There were objections to other mandates. There was no objection to that rightly, and it shouldn't be. I come from a life of politics, and I think that one of the ways you close some of these gaps and divides is, number one, acknowledging there are gaps and divides. And had it not been for COVID, I don't think we would have realized as quickly, as powerfully, as potently that we could do these increases without impacting the bottom line. In fact, if you didn't do it, you were probably going to lose employees. So Jay probably has an even more wider perspective on this.
I think this is a out of the 26 years I've been participating in business and helping to grow rocket companies, I've never seen a situation where the pressure on technology and recruiting is at the level that it's at today. And it's interesting because look at our tenants or service positions, restaurants. Clearly, we know there's a labor shortage there, and there's a lot of pressure. But when there's inflation, and I think we're all aware of the fact that at least right now there's certainly some wage inflation that we're experiencing. For us, the way to combat that is to drive efficiency in our business. And the way we drive efficiency is through investing in our tech platform. We've got more dollars today going to our tech platform than ever before. And every single day, we're getting phone calls. And the difference is the phone calls used to be regional, right? So people were calling from other places here for our technology folks. Now the calls are coming from California. Now the calls are coming from Austin, Texas, because people are working remotely. And so you've got to invest deeply in your culture, because I can get in a wage battle to some extent, but if people believe in the mission that we're on, if they understand why they are at Rocket Companies, at the end of the day, I think that's what's going to keep them. And so we are doubling down on our culture. And this is also about bringing people back in the office, because although we're engaging virtually and we just had our Rock Olympics, we're bringing people in outside to do some games and remember that they know each other and it's fun to be around each other. But you've got to invest in your culture, because when those calls come and someone says, hey, listen, an extra $70,000 in your salary, that's real. And it's hard to even have them take a second and pause and bring that forward to their leader unless there's that strong culture where they say, wait, I don't want to leave, let's have a discussion. And that's really what we're looking for today. Now, our attrition's been, I think, lower than the industry, but we've got to recognize Michigan is a place where they've identified us. Great talent, wages are lower. It's a place that the West Coast companies are dialing in, and we've got to be ready for it.
Yeah, thank you so much. Let's talk cryptocurrencies. Don't know if I fully understand them, but I know COVID helped accelerate a number of digital reforms in corporate America, and blockchain has been a part of that. And PNC recently applied to regulators to allow your customers to trade in cryptocurrencies. What is your view of the future of cryptocurrencies?
Well, I don't know. I think there are a lot of people who don't know what the future entails, but we do know that that this will be a part of the future. And I think there will be a lot of trials, be a lot of fits. And I think that anyone that denies it is going to find themselves really, really left behind. You think about the fairness of it, and as we continue to, the technology behind the blockchain continues to be perfected. I think of it in terms of how the whole tech revolution happened 20, 25 years ago. There were incumbents that emerged from it. There were a bunch of people that, thought they'd be a part of it, and they were, and then they weren't. And then you had a few incumbents, and we know them: Alphabet, Google, Facebook, Apple. So you're going to have some incumbents that come out of this, and the question becomes, how do products and services sold adapt to the way a new generation of people are going to consume and buy things? So I think every bank, every financial institution is going to have to find their way to be comfortable with this, and we frankly have a great team. One of the advantages of being at a bank like PNC is that there are a lot of people who are much smarter than me. There are a lot of people smarter in my house than me. I have 4 people in the house. I'm the 7th smartest.
I've learned that as well, yes.
You have the same thing?
I do, absolutely.
So we have a number of people thinking about all these things, and I think even a year from now, things are going to be far different. I'm curious to hear both of their perspectives, because they're both coming from different ends, but at the same time, they're really compressing to the middle, both John and Jay.
Well, first of all, if you would have told me 5 years ago that we'd be talking about cryptocurrency on Mackinac Island, I wouldn't have believed you. But here we are, and exactly to Harold's point, it's not going away. And if you take a step back and think about how we build and run all of our businesses, it's this belief that technology, leaning in heavily to technology, can create more transparency, efficiency, and accessibility. And so if you look at some of the applications for crypto, and if you think about it from the tokenization of assets to the blockchain and decentralized ledgers, there are some really interesting use cases for that technology. There's not use cases everywhere. If I think about the New York Stock Exchange, we process 330 billion messages a day. To try to do that on the blockchain is impossible right now, but also from an energy consumption standpoint, irresponsible. But there are going to be applications for this technology. So we're continuing to watch it closely and seeing how we can apply some of these technologies into our markets to, again, bring more efficiency, transparency, and importantly, accessibility to opportunity.
Yeah. The only thing that, and I think Mackinac is a great example of this, as I look at banking and we think about DeFi and where that's headed, I mean, clearly in our business, people would think, well, title, blockchain could make a ton of sense there. Auto title, that could make a lot of sense. There's a lot of delay in that process today. But I think about the future and government and regulators, the pressure put on the government to try to figure, it is moving so quickly now. And I think we all notice some of the gap between, it's hard to get educated on all of these things. And so this collaboration, I think we've had a great experience in Detroit with our government there and here in the state of Michigan with our governor, but that collaboration will have to happen between banking institutions, all these emerging technology, crypto, DeFi, protocols, and regulation to figure this thing out, and at a pace that we've probably never seen before. Right.
And Jay, I know you're watching the markets a lot more these days. You went public a year ago. You had a record year for income. How does it feel now running a publicly traded company where you're worried about wooing shareholders and where your stock price is fluctuating, especially given days like yesterday?
Yeah, it's interesting for sure. Well, we were very fortunate last year. It's been about a year now to be on the New York Stock Exchange. One of the first, I think, companies where humans were actually there ringing the bell again.
Exactly. Yeah. August 6th of last year.
It was really exciting. It was great to have Dan be able to go with us to do that, and it was really Dan Gilbert's mission over time to ensure that all of our team members could participate in the growth of our organization. Mm-hmm. And so taking the company public gave us the ability to have all of them become shareholders. And I think our learning lesson was, our mission in the 26 years I've been here is put your head down and build an incredible business. And now it's put your head down, grow an incredible business, and try not to get distracted from the day-to-day noise that comes from being a publicly traded company. And so having you on the board and others to remind us of that and keep our vision on the future. And so I was talking to a friend of mine, Tom Kartsotis, the founder of Shinola, and I was sharing with him some stories about a little bit of my frustration. Your children are watching your stock. Hey, Dad, you having a bad day? I'm at home breaking down how shares work, and valuations, and but what he said is, look, use it as a sharpening device to really get your 5-year plan down. And so that's what we've done. We've gone from maybe a little bit of distraction to say, nope, now we're going to even be more thoughtful about our OKRs, our 5-year plan, and what could get in our way and solve those riddles. And so I think it's actually made us a better company. It took us a few months to figure that out, but I'm really feeling great about where we're at now.
Right, you're doing great. I see it firsthand. Yeah.
I appreciate that. How's the stock price doing?
It was a little up today when I left the room.
Don't get distracted on the day-to-day movement.
So let's turn to sustainability.
One more thing.
August 6th.
August 6th was big for this guy. It's also big for this guy, too. Why don't you tell him what happened?
Oh, I was going to say, I'm a proud Michigander, and the only thing that would have kept me, I thought there'd be nothing that would keep me from being at the Rocket IPO, but literally the moment the bell rang and Dan Gilbert rang the bell, I welcomed a 8th generation Michigander.
Here we go.
Oh, that's right. That's right. Yeah.
You got something going on? Yeah.
Thank you, Harold, for that. Yes.
I did nothing on August 6th.
So let's turn to sustainability. There's growing investor pressure on all corporations now to pay closer attention to ESG. We talked for a long time about the environment and governance. Over the last year, we've talked a lot about the social justice initiative. Harold, PNC is doing a lot in this area, but the thing that I was most excited about was, and not just because you hired us to be a joint book runner, but you're CEO of an empowerment and inclusion SPAC, and it's the first purpose-driven SPAC, which is a blank check company, to go public. Can you talk about that?
Sure. My friend and colleague and part boss, Rick DeVore, was up here talking a little bit about that. Suzanne her firm did a great job as a book runner on our deal as we raised $275 million. It's actually $276. But I think when I say 276, people think I'm a moron. But we raised $276 million, not 275, to launch. We launched on the stock exchange. We're the most diverse board to ever list on the exchange. I want to be displaced there. There are 9 of us on the board. 6 are women, 4 African American women, and we have a unique mission. all credit goes to Bill Dimchak and PNC and our team, for the team there, for being a sponsor and wanting to build out a SPAC with an intentionality that we have. I'm proud of it, so I can go on and on about it, but here are the three things that really make us unique. Our board, the diversity of our board, diversity of experiences on that board. We have two of the PNC board members are on our board, Jay and John, and our two African-American women. Our chief investment officer from the bank is on the board. Our chief corporate responsibility officer and our deputy general counsel from PNC is on the board. I'm obviously at the bank as well. We are, number two, we're out to find a company that has diversity at its founding level or management level, and if we don't, we'll pair diversity with the company. And three, we're going to give away all of our promote. We're going to give away all of our profits from our sponsors. Jefferies is a minority sponsor. I'm a sponsor, and PNC has the lion's share of the sponsorship. All of the money is going to fight systemic racism and advance economic equality. No SPAC has ever done that. I talked about some of the things that came out of all of this moment and unrest last year, from race to healthcare. I think it forced us to put our ingenuity caps on and our daring caps on. One of the things I'm most proud of at PNC, number one, they made me CEO of this, notwithstanding that was the only thing they did wrong with the SPAC was put me in charge of it. But one of the things that makes me so proud of the way we've dealt with D&I is that we've given people the freedom to talk about things. And I think, and Jay and John would have to understand, if not practice this as well. I think the more people are allowed to talk without fear of being punished, the more likely you're going to make progress. So we have a number of initiatives that have come out in the last year and a half, and probably would not have but for this moment. And I think as you look across the board, the things that the stock exchange are doing, things that Rocket is doing, and by the way, I love your ads with Ricky. You think about all the things companies are doing, including GM and Ford and others. That's what's going to make it better. And I hope we don't lose this appetite because we're a year and a half, or 2 years past from George Floyd. That moment helped open all of our eyes to the things we could be doing better. And instead of affixing blame to the past, let's seek out opportunity for the future. And it seems like that's what so many companies are trying to do. And I'm glad PNC is a part of that, landscape and spectrum trying to do that.
Absolutely. John, first I have to thank you for being here. Stacy Cunningham, the president of the New York Stock Exchange, the first woman president of the New York Stock Exchange, in its 226-year history, was going to be here. She had a conflict arising. John graciously came out and took her spot. And I have a little history with the exchange. One of the founders of Siebert, Shank, was the first woman in 1967 to get a seat on the New York Stock Exchange. That was 175 years after it was formed. We also have a woman CEO of NASDAQ. So what does this mean? Why is it so important that the leadership on the New York Stock Exchange is now represented by a woman? And what is the New York Stock Exchange thinking about how it impacts, how its membership behaves?
Absolutely, and it only took us 175 years to have the first female member of the exchange, so at least the first female CEO came in a shorter period of time. But I love what Harold and his team are doing. And they're going out there, they're identifying a challenge or an opportunity and saying, we're going to put our money where our mouth is. We're going to find people, we're going to find companies and people that believe in what we're doing here, and we're inviting everybody to come along with us as well. And so it creates an opportunity for people to invest in that success, invest in that thesis and that mission. And so the bottom line is, if you don't have diversity in your organization or understand the importance of diversity, you're going out of business, period. And when I say diversity, it means diversity of background, of gender, of ethnicity, of thought, like you just mentioned as well. And if you have that, that's when you're also going to have innovation. And we talked about the pace of change moving so fast. And so companies really need to understand the importance of being competitive, but it's also just good. And if we think about our listed company community, I said it's 2,400 companies, they employ 43 million people directly. And so we thought, where can we make the biggest impact? And it's easy to identify where all the problems are, but it's tough to create solutions. And so we said, we can actually drive an impact, and let's start at the board level. And so we got together with our listed companies and just taking a step back. There's been progress. So if you look at the Russell 1000, 99% of them have a female on the board. 91% of them have more than one female on the board. And And 80+% have over 20% of their directors that would represent themselves as diverse. So there's progress. The trend lines are heading in the right direction. We're not even close to where we need to go. And so what we did is we identified NYSE-listed CEOs that shared our commitment to diversity in their organization. And let's start at the boardroom. And for the folks that have built businesses and lead organizations here, you know that oftentimes the best employees, the best team members, the best board members don't come via recruiter, they come via referral. And so we said to those folks that shared our commitment to diversity, we want you to identify, vet, and personally vouch for public directors with a focus on diversity and inclusion. And it could be a combination of either people who have served as directors at public companies and have brought great benefit to those companies, or it's very difficult to break into the board orbit. And so how can we help that next generation of board leaders get placed on a board of directors? And so companies and CEOs are identifying top talent in their organization and providing them opportunities to really not only shine and develop in their own careers, but bring that diversity that's critical if we're going to be successful as an economy, as a country, and even beyond our borders. So we're very focused on it. It is here to stay, and any company that's not focused on it will be gone shortly.
Great, thank you. Jay, as Detroit's largest employer, the family of rocket companies and affiliates have been a driving force to the comeback of Detroit. We hear all the time about what the company is doing. And then all of a sudden, Dan and Jennifer Gilbert announced $500 million to help Detroiters. And then Rocket stepped up on vaccine efforts. Can you talk about why, as an employer, that's so important to do for your city?
Yeah, I think it's the culture of who we are. You're referencing kind of ES&G from a publicly traded perspective, but well before we went public, Dan always talked about us being a for more than profit company, and reminding everybody there's no shame in having an organization that can generate a profit. It's what you do with those profits, and do you invest them back in the communities that you live, work, and play in? Do you invest them back into your team members? And I think he's been, at least for me and I think for many others, a role model in how to think about this virtuous circle that you can create. And so the announcement that Dan and Jennifer made just follows along what's been well over kind of a 10-year path of contributing to Detroit in particular. And for us, it's almost, I was talking about the culture you create to retain your team members. For our team members, that's a must. In fact, I can notice today that they're missing that. Their ability to be out in the community as they view as part of their role, and with COVID impacting that, it matters to them. And it's a piece we've got to continue to lean into and get back to here. And so it was a great announcement. The first step, as you know, is to help folks who are facing foreclosure with property tax. We could talk forever about why that's happened in our city, but importantly now, identifying the 20,000 or so families that we can assist. But there's another step to that, which is collecting data and information from them about what are the next things they require to help stabilize their families, to build wealth, and that will inform where that next tranche of money goes. And we're hopeful that about $50 million a year over the course of the next 10 years will be deployed in really stabilizing communities across the city of Detroit.
That's fantastic. I want to talk a little more about governance, because the data as of last year was not good. In June of this year, the Alliance of Board Diversity and the consulting firm Deloitte released a study that noted the deep deficit companies face when it comes to fulfilling their pledges to diversity. And they found, and we probably have seen a little movement in the last year, but they found as of last year, an overwhelming 82.5% of directors among the Fortune 500 companies are white. Now, 7 states have passed some form of legislation to legislate. California was the first that companies in their states have diversity on their boards. I just want to ask, Harold, why aren't companies doing better?
I think some of them intend and want to do better, but don't know how and aren't willing to be courageous in just doing it. I've worked at a few companies, and they used to always put me on the diversity committees within the, for lack of a better term, a better way of describing it, and they would kick me off for about a month because I never understood why we had to have a committee to figure out, well, how do you hire black people and brown people and women? I said, just go hire them. And if they don't work out, then you fire them. Like, you know, you do everybody. I mean, there's never been a committee in the history of corporate America saying, how do we find more white guys? Because I'm a part white guy, so I'm not being critical. I'm just saying there's never been anyone saying how we go out and do it. And I think to John's point and to Jay's point, there's a great organization that PNC has taken a stake in as well called Take Your Seat. In addition to what John is saying, we think that one of the challenges that you hear from corporate America, because I think sometimes you can just try to butt heads with people, but one of the challenges and one of the things that companies say is that we can't find the candidates we want who are qualified for some of these roles. So this firm, Take Your Seat, which you ought to look at if you hadn't seen them, it started by a couple of VC guys that decided that they had enough. A couple of white guys saying, we've had enough of this. We want to figure out how we identify the right kind of talent. So this group is identifying and training talent to be able to serve on boards. So companies can call Take Your Seat and say, we're looking for a board member who has audit experience because we need an audit committee chair. And they're able to provide a list, and they'll live or die whether or not they get really good candidates and people, the Rockets of the world can say, you know what, they did a good job, then you'll go refer them somewhere else. Right. So I think we have to just be willing to tackle this. Now, the other side of it is people can't get upset and take this personally. Like I said what I said, but you got to be willing to go to the room and say, look, there's a problem, we want to fix it. I think sometimes people come in and we get all angry, and you get angry, we're not going to get a solution. I'm just not that kind of guy. I want to figure out what's making a company not want to do it, and let's figure out how we match someone with what their needs are. And I think we have an appetite for that more today. I mean, interrupt you, Jay. We have an appetite more of that today on each side of the ledger for us to be able to get some real results.
I want to jump in here because I think there are 2 or 3 things that I've heard both of you mention that are absolutely critical. Number one is just transparency and discussion. You don't need a committee, but what you do need is the ability for people to talk openly about how to get better or what's bothering them or what's going wrong. Our chief diversity officer, correct. And that starts with leadership. Trina Scott is here somewhere around Mackinac Island right now. But her team, in the spring of last year, we had hundreds of team members on calls and chats and express whatever you need to or want to express. And the deal then has to be for the leadership group to be okay with that, right?
Yep.
But when you start having that culture where that discussion is all right, now you can be far more intentional about your actions because everybody is open in the communication. And I think you got to look at your processes. We certainly had to. You say, okay, we're doing all the right things, but then you really go deep and say, wait a second. Couldn't we have tried harder? I'm thinking about our hire for our CEO of Bedrock. Kofi Bonner came from California. And so people would say, well, there's no way you're getting somebody from California to come to Detroit. Not true. You got to work hard. You got to fly him here. You got to go to dinner. You got to show him all the great things that are happening. You got to inspire him to know that he can be part of what we're doing. But if you put the effort in, you can attract great, diverse talent. But you've got to make a decision that it's important, and you've got to have that open discussion so everybody's on board that is important, not just a few people that then float away to their office and back to business, right? Everyone's got to be on board. So. Totally.
No, it's really important. And in Michigan, the data, like national data, is not great. 18% of Michigan's 77 public companies have no women directors. That was from a study by Inforum and the Mike Ilitch School of Business. And women of color represent 2% of Michigan company boards. So Jay, you went public with 4 out of your 7 board members being women or people of color. Why can't more Michigan companies get this right?
Well, the thing I'm going to...
First of all, give them a round of applause.
Yeah.
Thank you. And I'm going to go, this is Dan's philosophy, which is, and we already talked about this, referrals. right? So you get, I'd never been through this before, but you get stacks of paper from the investment banks with all the possible board members you could put on the board. And we went kind of another direction, and we said, let's open up our Rolodexes, and let's talk about people we know or people we know people who love our city, because that's core to who we are as a publicly traded. You know this, like
Right.
even though we're a publicly traded company, if it doesn't serve our dual mission of supporting our city, we're not doing it. And so, but that's the technique that we used, is the Rolodexes, the relationships to find the right people. And it takes a little bit more work, but quite honestly, it's just a decision. And that's how we did it. And I didn't think it was any more work than following maybe more of the traditional path.
Right. And I know each of your boards, I looked, has diversity on your corporate boards. ICE, which owns the exchange, also has great diversity. I think at least 3 women directors that I saw. So hopefully this will continue to improve. Hopefully, if we talk about this next year, the numbers will continue to improve.
And I think if we see more CEOs following the lead like Jay has done, and Dan Gilbert when building out the board of directors, we'll see more public companies from Michigan, more jobs created,
Right.
and just a better society more broadly.
Right. Since I have the time is up. Oh my goodness. Okay, so I'm going to do a quick, these are very successful people on the panel, so I just want to ask them to predict a year into the future. Where do you see the economy 1 year for today? And I'm going to ask about interest rates. The 10 years at 1.3, the 30-year 1.856. Where do you think we're going to be?
Oh boy, this might be a contraindicator.
Yeah, hang on, let me.
Yeah, I was going to say. So we bet against what I'm saying. I think the interest rates back up towards 2. I mean, they have to normalize at some point in time, and you know the economy seems to be doing well. Companies are performing well. You know the economy. You know, jobs are being created, so that does put upward pressure on rates.
I think a year from now, rates will stay the same because there's an election next year, and I think the economy is going to grow.
Okay.
I think it's choppy. You know, we talk every morning. We're talking about this, and there's a lot of important decisions that are going to be happening here. We're paying very close attention to taxes. Certainly, we've got to carve out money for important initiatives, climate change being one of them. But we also have to make sure that especially the corporate tax code comes out fairly, and that's something we're very, very focused on. I don't see the 10-year, maybe 20, 25 basis points. I think long-term inflation remains in check. Short run, I'm a little concerned. I think there are real signals that it's going to be choppy the next 12, 24 months. So, you know, our mission is hoard the capital, look for great opportunities through the chop, and make investments.
Great. Well, I had more, but we're out of time. So thank you all so much.
Thank you, Suzanne.
Thank you to the panelists.
Great job.
Great.